Okay, so here's our final example video. I'm going to show you a full session process of running both strategies, or rather going through the analytical process of determining which key level or smart money approach you will use, by showing you my trading session from today, the day that I am filming this on April 28th, 2023. Now, I woke up at 2 a.m. Because I have severe sleeping issues, and sometimes, as long as I feel calm and stable, I can sneak in both trading the London session and New York session. So I'm going to show you that process from today. Now, beginning on the 15-minute chart, step 1 is mark the market structure for the 15-minute chart, and we're going to note the break of structure, continuation of trend, and key levels, and whether there's any imbalance that we need to trade off of. So starting from this low to this high to this low, we're going to draw structure, noting as well that the 15-minute has been in a downtrend. So this isn't too difficult. We have we have our 15-minute path set up. Alright, so from the low, we have one pullback candle here, not a valid pullback. We're just going to keep going up, looking for multiple pullback candles. So we have a high here, and it looks like there's a pullback candle here and a valid close here. So this will count as a valid pullback area. And there's a real breakout, not here, but with this pulse here. And it looks like price basically returns to this key level area, although it does overshoot it a bit, so this is why it's important to have your stop losses well away from the low or high of a key level area. So we have a fake breakout here, and the high is, this is a valid high that's broken from this high there. We have a full body candle close above it, plus a valid candle as well. And so our structure at this time has been higher high, higher low, higher high, and continuing of an uptrend. However, we have this pullback that looks like it breaks a low here with one candle and then a second candle here. So let's look at this down structure as well, because this uptrend 15-minute BOS is broken. So this downtrend structure, we have a low, there's a valid pullback. Breakout occurs with this big candle here, followed by another one, and there's a continue draw down till here. You see a valid pullback. But there's no real break in structure until we get beyond these wicks with this candle here, and this candle closes down there as well. So we have a continue push down, and here there's just a range, there's no valid pullback. So at this time, this is our 15-minute structure, and we can draw a key level with this last up candle here. and turn that red because we know we're in a downtrend, and here's the 15-minute key level label. So here's our 15-minute chart. We can say we're in a downtrend on the 15-minute chart. And let's see, is there any imbalance? There's a little bit here. There's a little bit of imbalance here, and there's some imbalance here. So technically, we could be looking for a POI pullback. So we'll just mark that on the charts as well. And sure enough, it actually lines up with the 15-minute key level. So at this time, we're just going to leave the key level as is, but it is nice to know that this is a powerful place given the imbalance involved. So let's now mark up the 5-minute chart from this high to this low, which is our last wave on the 15-minute. And we're going to use a red path for this. So from the low of the key level, we have ranging candles here. No real valid pullback there either. We have a low, a valid pullback, 2 consecutive candles closing away from each other. And do we have a valid breakout here? We do. Here's a candle that this candle closes below that one, and then these do too. So here's our 5-minute structure: a low, lower low, lower high, lower low, and I forgot to mark that this is our continuation of trend for both time frames. So we'll just mark that as COT. And let's add the 5-minute key level here. The last up candle, call that 5-minute. And there's some imbalance here as well. So if we wanted to, we could draw and look for a POI zone on the 5-minute as well, which would likely be this candle here. Now, these are all just areas of possibility. We don't have to set a bunch of limit orders until they get close to these areas, but we want to monitor market structure as we go. So for now, we're just drawing our levels. I'm going to, for the purpose of keeping a cleaner chart, I'm going to remove the Fibonacci since we have our POI zone from the 5-minute already marked, and our key levels already marked as well. So now that we see this is our last pulse down for the 5-minute, let's go, and should note as well, this is the 5-minute break of structure, this high here. Okay, so let's do our 1-minute chart. And going from the high, we have, I'll zoom in for y'all. So we have a, we got to make it green for our 1-minute. All right, we have a high, a low. There's a lot of ranging candles here. So we have a low here. No valid pullback here, so we can just keep looking for a lower low. It's all a range. Here's a low, no valid pullback. This is just a range candle here. There's no close above it. New low, no pullback. We don't have any valid pullback until here. So here's a recent low with valid pullback here, and we get a valid break structure here. Now we're just kind of in the range between this lower high and this lower low. But this is our 1 minute structure. Here is our key level on the 1 minute chart. And there's some liquidity, some imbalance here between those two candles. There's a bit here, but it looks like a good chunk of it might have been captured with this pullback. So we'll just draw this high to this low, and our last up candle that's a valid candle would be this one here. This one is a doji. Oh wait, that's not part of our zone. This is our zone. I don't have a chart smaller than a 1 minute, so I would just look to trade off of the recent 5 minute key level, since they're so close together. Since we can't go any lower than the 1 minute, I can't tell you if there's an up candle in this big Marubozu down candle here. So we'll leave that alone. Just know that you could probably take a 1.61 order away from that block, from that key level. But for now, we're not even up there yet. We're just focusing on this 1 minute key level. So here we are, assuming that the trend is just going to continue. So we can put a short position, like a pip away, 65846, 65836. All right, we can set an order here. The stop loss would be a little bit above, like a 3 pip stop loss. At this time, since the recent low is only 4 pips, this wouldn't be a trade that's worthwhile. So we're going to ignore it unless price continues to go lower. So at this time, just watching market structure. No limit orders yet. And as you can see, it's still a key level that's respected. Price jumps off it. And later breaks it a little bit. But we want to see if price is going to break the 1 minute or if it's going to break the continuation of trend. Alright, so price is continuing to tap above it. There's no valid close above the key level. We want to see those legitimate close above. And it looks like it's just kind of oscillating. Let's see if we can speed it up a little bit. Alright, so now we finally get a break of structure. Where's our chart? Forgot to update this. Our 15 minute was down, 5 minute is down, and the 1 minute is now up. So our breakup structure is broken, and now we can track the market structure here on the break. So it looks like, just ignoring a lot of the noise here, we have a high, and we have a big pullback here, and then price breaks the high here. And there is some imbalance there, so there can be a possible return to a POI zone. Down here, it would be this down candle here. This is a 1 minute POI zone. And I'll leave this here for now in case price continues up. Ooh. Now, this happened quickly, but as price is nearing the 5 minute, we should be monitoring the 5 minute as well, because the current structure is that we are in a overall down trend because of the 15-minute structure. 5 minute is also still down too. This is its key level area, so we also could put an order here, like a pip below. So 65939, 65929. Yeah, and there's a entry there. Probably make it 6 pips because of wanting to avoid the break of structure. Looking for a return to the low here. Let's see on the 5 minute. I like to look for a recent low close price. Yeah, this candle here. Alright, so there's a 5 minute that we're tapped into, and if you wanted to do both, see if we can monitor that POI zone, but it would just be a return to one of these high points, which may or may not be worth it. 65826, 65836. Probably have like a 3 or 4 pip stop. Target would be a high up here for like a 2 pip pullback. And at this time, both trades are still running. Alright, let's see where we're at. As you can see, we are scalpers in this style of trading. We don't have a bias. You are just flowing from one area to the next, and you can potentially profit off of both. Alright, so at this time, there was a news release. So it looks like if we held out on the POI zone, would have missed out. That would have been a loss. The 5 minute would have been a win. I would have closed it up here though before the news release. Actually, I did close it up there before the news release. So I'm going to move this one out of the way so we can find the other one. Basically, close would have been here. Basically, it would have been about a 2R win and a 1R loss, so still 1R up on the day. Now, at this time, there was a news release. It was personal spending, so basically consumer, personal economics, if you will, and core price index. Nothing much changed. Still, you get reactions in the market, which is why we avoid news trading. So your close should have been at least 5 minutes. Sometimes I see 15 minutes being a good, 15 minutes prior to the news release being a good point to take whatever you have open and close it and just take that profit or loss wherever it's at. So after a news release, I just stop trading for the day. But I want you to see just how easy it is to move from one setup to another, and it doesn't matter what overall news is, what the overall market bias is. We're just moving from one key level to another off of different time frames and focusing on what is currently going on in this current moment. Even though we marked up 5-minute and 15-minute key levels as well, we don't react to them until price gets close. And so this is an idea of what a session could look like. It can take quite a bit of time if you're able to sit and watch. If not, you can probably check in every now and then and set your limit orders as needed. I'm able to work and do other things while I am trading this style, so if you need to work while trading this, it is quite possible that you can do both. However, the ideal is to trade during a session where you can be free, not working on your own time, whether that's the London session or the US session. Those are your two best options for scalping. So this is our trade this is our strategy in a nutshell, and I wish you the best of strength and luck as you take it live.